Stock Market Investing for Beginners. The most updated step-by-step guide to investing in the stock market. Discover the best day trading strategies to beat the market year after year. Written by Marcus Rice. Narrated by Jim Rising. Chapter 1. Before Investing. If you're listening to this book, you're interested in investing to generate wealth. However, there is one thing you need to do before even considering putting $1 in the stock market. Since this book is dedicated to beginners, we feel it is important to spend the first chapter talking about an even more important topic: saving. In fact, we believe that if you have an emergency fund of at least 6 months, you should focus on building that first before investing. Why? Because by having some cash set aside, you'll not have to disinvest in case of an emergency. You can easily calculate this number by multiplying your monthly income by 6. For instance, if you earn $5,000 a month, we advise you to set aside an emergency fund of $30,000 before investing. Let's take a look at some of the basics of saving money. Everyone knows saving is a wise choice in the long run, but many of us still have a hard time doing it. To save money, it is not enough to spend less, and even this trick is not easy to put into practice. Smart savers also consider how to spend the money they have and how to maximize their income. Pay yourself first. The easiest way to save money is to make sure you never get a chance to spend it. Establishing that part of your salary is deposited directly into a savings account or a pension fund allows you not to worry about how much money you should save each month. In practice, you save automatically, and you can spend all the money you have left as you like. Over time, putting even a small portion of each salary into your savings can make a difference, especially when considering interest. So get started early to get the most benefit. To establish an automatic deposit, talk to the payroll person at your job, or if your company uses them, the payroll service. If you will provide the information of a deposit account other than the checking account where you receive the salary, you should be able to establish a direct deposit without problems. If for some reason you cannot get an automatic deposit for each month, for example, because you work as a freelancer or because you're paid in cash, you can decide how much money to manually deposit into a savings account each month, and always follow your guidelines. Avoid getting into debt. In some cases, getting into debt is essential. For example, only very rich people have enough money to pay for a house in a lump sum, but millions of people manage to buy real estate thanks to mortgages. In general, though, if you can avoid getting into debt, do it. In the long run, paying the money owed at the time of purchase is always a more advantageous solution than repaying a loan that accumulates interest over time. If you can't help but take out a loan, try to pay the highest possible down payment. The greater the part of the purchase that you can deal with immediately, the sooner you pay off the debt and the lower the interest. Even though everyone's financial situation is different, most banks recommend that debt amounts to around 10% of gross income and consider a solid situation to be 20%. 36% is considered to be the upper limit of the reasonable amount of debt one should have. We advise you to stay debt-free as much as possible. Have saving goals. It's much easier to save money if you have a goal to aim for. Set goals within your reach to motivate you to make the difficult financial decisions needed to save responsibly. It can take years or decades to achieve the most important results, such as buying a house or retiring. In these cases, it is important to check your progress on a regular basis. Only by taking a step back and observing the situation from afar, you can then understand how far you've come and how much more you have to go. More ambitious goals, such as retirement, can only be achieved after a long time. In the required period, the financial markets will change several times. You may want to research the future market trend before setting yourself a goal. For example, if you're at the beginning of your career, many finance experts argue that you should save around 60 to 85% of your annual income.
Sample complete. Ready to continue?